What if I told you that Solana, a project once valued at $80 billion, is now headed to zero? Solana was one of the darlings of the last bull market. It grew from about $1 at the start of 2021 to an all-time high of $250. But now, it's January 2023, and the price of SOL has dropped below $10. This represents a 96% drop, making Solana one of the worst performers of this bear market. The total value locked in its DeFi protocols has seen an even steeper drop, falling nearly 98% from all-time highs. So with the stats painting such a grim picture, it's got people asking, is it over for Solana? Now, people have been fudding Solana for years now. That's nothing new. But the latest development in the saga centers around Sam Bankman-Fried and his role in pumping Solana. By now, you're probably sick and tired of all the FTX and Sam coverage. But it's the allegations of market manipulation that have hurt Solana the most. I mean, even if you think people are overreacting here, one thing is crystal clear. The collapse of FTX had enormous implications for Solana. Why? Well, because FTX and its hedge fund Alameda were major backers of Solana. They invested in multiple fundraising rounds and held over 58 million SOL tokens, a whopping 15% of its circulating supply. And not only did they back Solana, they also backed many of its ecosystem projects. I'm talking Serum, Oxygen, Maps, and a bunch of other, shall we say, Sam coins. And you know what's the worst part about that? Alameda's allocation in these tokens were often worth more than their entire circulating market caps. I mean, how is that even possible, right? Well, it's possible because the majority of those coins are still locked up and are not yet circulating. So while Alameda had billions of dollars in those tokens, that was only on paper, and in reality, they were super illiquid. It was actually this concern about Alameda's lack of liquidity that triggered the initial bank run on FTX. And now, there's rumors floating around that Alameda was manipulating these coins all along. What I'm asking is, who in their right mind would touch these coins now? And more specifically, where will demand come from for Solana ecosystem projects now that they're seen as toxic waste? Now, I'm not gonna bore you by digging into each of these Solana projects one by one, but there is one in particular I want to focus on: Serum. Because Serum was arguably the most important protocol in the entire Solana ecosystem. It was the main DEX on Solana, and it served as the central order book for almost every project in the Solana DeFi space. Many dApps leveraged Serum as their back-end liquidity provider, whether they were a game like Star Atlas, an aggregator like Jupiter, or a lending application like Solend. But now, the total value locked, or TVL, in the protocol is almost non-existent, dropping from over $1 billion to roughly 300K. So you can pretty much stick a fork in them and consider them dead at this point. But is what happened to Serum a glimpse of what's about to happen to Solana? That's the billion-dollar question I want to answer. I mean, if you think that FTX and Alameda were simply VCs that invested in Solana and now things are better now that they're gone, then you might want to stick around, because I bet the data will change your mind. It wasn't just Serum that suffered from FTX's blowup after all. Before the collapse in early November, Solana's TVL was at $1 billion. But now a couple months later, the TVL is sitting at $200 million, and that trend is showing no signs of reversing. I mean, it's true that other chains went through similar downturns, but none of them were hit as hard as Solana. And it's not just the TVL either. Their SOL token has taken an absolute beating too. It's dropped 96% from all-time highs, and that price drop is causing some unforeseen problems to propagate across the ecosystem. For example, a lending protocol called Solend was not able to handle a big liquidation, and it now has millions of dollars in bad debt. Meanwhile, people who are simply holding SOL are being heavily diluted every day. The network is printing like 50 times more in block rewards than what it's earning through network fees. Just to show you how bad it is, they are number 2 overall on the daily issuance list, but just number 13 on the fees generated list. So yeah, you can add token economics to the long list of things that's working against SOL. But there's something else that's not looking good for them, and that'd be their darling NFT ecosystem. Two of Solana's most notable projects, DeGods and Utes, confirmed that they were ditching Solana for Ethereum and Polygon. But why are they leaving though? Well, it looks like they feel that there's not as much opportunity for them in the Solana ecosystem anymore. I mean, some people call them grifters for ditching Solana, but what's worrisome is that these two projects combine for around 70% of Solana's weekly NFT sales volume. That's a fact, and them leaving will have big implications for the future of Solana. Imagine you're an NFT creator looking for a network to launch your collection on. Would you join an ecosystem that everyone is leaving? I sure wouldn't. Now, so far, all I've mentioned were the negatives about Solana, but let's swap sides for a bit and put on our bull hats, because we gotta be fair and look at all the reasons to say bullish before we can come to a final verdict. But before we get there, I gotta say that I've seen so many people get hacked lately and get their crypto stolen. That's pretty worrisome to see. I mean, I can't blame them though, it happened to me before, but then I really took the time to harden my security. And one great way to do so is to use security tools such as Guardio, who's also the sponsor of our video. Here are 8 rapid-fire reasons why you should try them out. First, they block phishing websites that try to fool you into signing transactions with your MetaMask wallet. But it's not just crypto, they also block fake shopping sites and other sites that try to serve you malware. Second, they detect malicious Chrome extensions that give hackers access to your accounts. Third, they monitor your email addresses and alert you as soon as your data is leaked on any device. Fourth, they block unwanted notifications and pop-ups for you. Fifth, they're constantly upgrading their systems to detect the latest crypto and malware scams. In fact, they can detect and block 100x more threats than their top competitors. Sixth, they have a free trial, and if you use my link guard.io/coinsider, then you can get 50% off your first month of premium. Seventh, you can add 4 additional people to your account at no extra charge. And eighth, they have a business version if you want to get this tool for your entire team. So the takeaway here is that Guardio can keep you safe. Go download them now if you want to take your online security seriously. Anyways, back to the bull case for Solana. And the first point is that the Solana community is showing surprising strength and resilience in light of everything that's happened. Some developers were quick to fork Serum after the FTX debacle, and the community quickly moved to that new version. The activity of developers is actually one of the most important points to analyze when evaluating the health of any given blockchain. And in terms of Solana, we're not seeing any signs of a developer exodus yet. Quite the opposite, actually. Compared to other layer 1 blockchains, this metric is actually holding quite well for them. Second, many people are worried that Solana's core team won't have enough money to sustain themselves. But Anatoly Yakovenko, the founder of Solana, tried to calm things down by explaining that they still have funds for another 30 months of operation. Also, other big teams across their ecosystem were quick to come out and say that they had no exposure whatsoever to FTX. That does make me feel a little better, but the question of whether their current funding and run rate is enough is of course debatable. Third, there are still multiple innovations and initiatives coming out soon in Solana land. From their Saga Web3 phone, a second validator client, and even a new gas mechanism, Solana has initiatives in progress across their entire ecosystem. Builders are still building, which is a positive sign of course. And what's even better is that those projects don't rely on FTX or Alameda to get their funding. Which brings me to my fourth point. VCs are still backing Solana. Now that is technically true, but it has to be taken with a grain of salt because these guys are carrying huge bags of soul after all. What are they gonna say, right? Yeah, Solana's never gonna recover. Of course they're not gonna say that. In fact, some VCs are really feeling the squeeze because of their Solana investments gone wrong. Like Multicoin Capital is down 90% this year on their portfolio, and they were one of the biggest shills and bag holders of Solana. Now my last bullish point for Solana is a controversial one because it's the contrarian view that the FTX fallout was actually good for their ecosystem. Vitalik himself said that it's good when the awful opportunistic money people are washed out. Now that's certainly an optimistic way of looking at things, but personally I'm skeptical and I think that's just cope. Anyways, one of the most surprising things that I discovered when doing my research was all the similarities between Solana and now defunct blockchains like EOS. If you weren't around back in 2017 to 2019, you probably didn't know that EOS was the high-flying ETH killer that people were pushing. They were fast, they were scalable, and they were proof of stake as well. But to achieve that, they needed expensive validators, hefty infrastructure, you name it. I mean, does that ring a bell to you? Sounds just like Solana, right? Well, EOS is now a zombie chain as there's no real adoption and their token is now down 96% from all-time highs. But if you tell the Solana bulls about these arguments or comparisons, they'll stick their fingers in their ears and yell FUD They'll say that Solana is having its ETH $80 moment, which if you recall was ETH's lowest point of the last bear market, when people really gave up hope and thought it was going to zero. But I'm not buying that comparison personally, because the differences between ETH and Sol are enormous. You could actually see the grassroots adoptions and progress for Ethereum back in the day, and it wasn't pumped up or manipulated by powerful players like FTX or Alameda. Also, the fundamentals of the chains are extremely different. A huge selling point of Solana was its fast speeds and low fees. But what's going to happen once layer 2 projects roll out and they kill Solana's main value proposition? And more importantly, what's going to happen now that their main token pumper is gone and in jail? Well, there you have it, my bear case against Solana. I gotta say, this FTX saga really opened my eyes to the truth about Sol. And that's why I think it'll turn out more like EOS rather than ETH by the time this next cycle rolls around. What do you think though? Also, don't forget to try out Guardio by using my link below to get a free trial and discount.